Hey everyone, welcome back to Grumpy Monkey Technical Trading. My name is Michael. Wow, what a week so far, huh? Absolutely tanking at the beginning of the week and then seeing a recovery and then rocketing back up. Tons of money to be made, tons of money to be lost. Makes me regret having a full-time job because when it was sitting there at the bottom, there were so many amazing buying opportunities. Today I want to look at a few stocks, ones that we've looked at before like Twitter and Chevron, and just see where we're at in the market currently. Is this a good time? Have we really recovered, or we've just recovered and then gonna settle back down again? So stay tuned. All right, so Twitter. If you've been paying attention to the show, you've known that I've done a few episodes now, all marked out by the red lines on Twitter. On this one last Thursday, I indicated that if it couldn't recover that support line by the end of the week, that we could be in for some trouble. That support line is on the weekly, and it was a critical support line. It could not. It maintained below it and then promptly fell as part of the rest of the market and plunged really. It's now recovered and it's testing that line again. So that line is now a resistance line. We need to break through it to really regain where we were. This is a popular trend for a lot of stocks in the market. If you assume that that plunge is now negated by us coming up, that's not quite true yet. What's happened is we've plunged through support lines and now we're challenging those support lines, but not a lot of stocks have really broken through them. Until they can break through them, we can't say we have regained the ground that we lost. We are simply making back some, at least, positive feelings. So the market in general took a really big nosedive. It took a really big negative hit. I wouldn't expect it to just instantly recover from that totally. I expect Twitter to be likely the same. This, to me, is the critical resistance line, this diagonal line here, because it's marked out not only by being a support line previously, but a resistance line that we've already challenged. So I don't expect Twitter to really regain a positive status until it can break that line and then break this psychological barrier here. If we look at the weekly chart, we see that this recovery is really part of a larger downwards trend. So we have this descending triangle pattern now that's been forced since it's been breaking that support here, forcing a lower support value. I expect that it's going to kind of ease up over into this resistance area, but not be able to break it without some major push, and then trickle back, maybe to squirt out a little more towards the end of the year. So this isn't as positive as I'd originally described a couple weeks ago, and that's just because it's violated not only a major support line here, but the psychological barrier of its entry point into the market. That really is a negative sign. I do personally own shares. I'm probably going to sit on them for a little while and see what happens. I'm encouraged by Project Lightning and what it could offer. I really believe in tweets as a service. I think where Twitter drops the ball is that they kind of let tweets be really almost open source and haven't created an enticing application to really draw in user interest and engagement. That's something that they've struggled on. I'm optimistic that Project Lightning changes that for the company overall. But as a trend, we are in a downtrend now. All right, so Chevron. I actually had a viewer request to redo an analysis on Chevron, so let's take a look. Obviously, getting completely pummeled lately. Oil has been falling to this support line here during the crash, but bouncing off nice recently, associated with the reduction in imports, causing an overall drop in availability of oil, which was pretty nice, a bit of a surprise. Hopefully you got a bit of money made there off of that opportunity. I expect that we're going to kind of ease up and hit this support, this resistance line here, but really the fundamentals of the market haven't changed yet. Not until Saudi Arabia or the United States or Russia or any of the other oil-producing nations really start meaningfully cutting back, we're still likely in for a bit of a glut of supply here. If I look just at the Fibonacci lines, you can see that we passed through that lower 61% line, which is nice. However, we still have a long way to go before we really meet the meat of the resistance lines in an uptrend. Now, with that being said, is that if it does fall back into this 70-75 region, that could present a nice buying opportunity, particularly at a solid yield for a company that you really know at a fundamental level will be around for a long time. So potentially an opportunity here to really get in at an affordable price. And now you kind of know the absolute bottom is around here for the stock, unless oil really craters. All right, so Microsoft will be the last one I talk about today. I looked at Microsoft probably 2 or 3 weeks ago now, noting some resistance and support lines, noting that really a true breakout isn't going to occur until it can get above this sort of 48 resistance line and then come back and touch on it. Indicated the support lines down below. We obviously hit one of those in the crash. Hopefully you were able to pick it up because I think that would have been a great opportunity. Excuse me. But after the show, a viewer noted, that those support and resistance lines were great, but you missed out an opportunity to talk about a couple other things, one of which was head and shoulders. So a head and shoulders pattern typically is a bearish indicator, so where you fall off the shoulder, but a reverse head and shoulders is actually the indicator of a positive trend. And they were saying, hey, we've really made this nice reverse head and shoulders where this is the head, and here's the first shoulder, and here's the second shoulder, indicating that it should at that point come off of that second shoulder and really take off. And I agree with that pattern. It is really a nice head and shoulders. They also said that it was a cup and handle. I wasn't as keen on that one, as the rules aren't perfect for that. Usually you don't like a dip quite so much, and it didn't look quite so nice on the daily. But I do agree with the head and shoulders assessment. If it was a cup and ladle, it would basically start to also increase like that, in sort of Big Dipper style. But I do agree with the head and shoulders. Also just very positive about Microsoft as a company as a whole. So looking forward to seeing it break out of this channel at some point. Not exactly when that is, but I do know that the downloads of Windows 10 have been very good. The reviews have been very good. So I'm optimistic about people staying in the platform and them being able to monetize that more. All right, I lied. I'll do one more just quickly. Before I talked about MGM, how this was a really nice breakout out of a descending triangle, and that it needed to hold this support line really for that trend to be validated, and then look to see it come off with some volume to then resume the upwards trend. So the market crash happened and it plummeted back into that channel. But you can see it's already back and fighting that support line from the top, or that resistance line now. So if it can get back over it, and it can do so with some volume, and then probably it'll have a little bit of a touchback again, then it's the same sort of position. So really at this point for MGM, we're looking for some solid volume going up. All right, thanks for watching. Appreciate it. Hope you enjoyed the show. If you did and enjoy the series just in general, please subscribe. It means a lot to me. And also subscribers are so important for growing the station just in general. So I've included links to all of the previous videos that I reference. You can access those. And if you have any comments, please just leave them in the comment bar or send me a message and I'd be happy to answer them. All right, talk to you later. See you again next time. Bye.